Hello everyone, and welcome back to a brand new video on the Young Hustler YouTube channel. And in today's Minute Market video, we're going to be taking a look at dividends and how they can be used to help you attain your financial goals. So firstly, what are dividends? Dividends are payments made out by the company to shareholders as a reward for them investing into the business. And depending on where you live, dividend income is typically taxed at a much lower rate than income earned from capital gains and are paid out on a monthly, quarterly, or annual basis. So the first question you might be wondering is, why do some companies pay dividends whereas others don't? This is because some startups and high growth companies, such as those in the technology sector, are sometimes unable to pay out dividends due to the high costs associated with running a business, or they might choose to reinvest it into the company instead to promote better growth opportunities in the future. Now we will look at some dates that are important to better understanding dividends. First, you have the announcement date. This is the date in which the dividends are announced by the company of management. Next, you have arguably one of the most important dates as it relates to dividends, which is the ex-dividend date. This is the day in which the dividend eligibility expires. So if you buy on this day or any day after, you will no longer be qualified to earn the dividends. Then you have the payment date, which is the day in which the company actually issues the payment, and you finally earn your dividends. So you might be asking, why do some companies choose to actually pay dividends in the first place? And this could include a multitude of reasons, including it demonstrates that the company is healthy and has been receiving great and consistent profits. Additionally, it allows investors to reinvest into the company as they'll use the dividend income to repurchase shares. And let's say if a company already has a great dividend history, if they choose to somehow cut the dividends, this will indicate to investors that the company may be in trouble. Next, we'll look at the concept of dividend yield. This is essentially when you take the annual dividend and divide it by the share price. This will show you what percentage of the actual share price you're receiving back each year, and will be subsequently able to spend on whatever you wish. So let's say, for instance, TD has a dividend that pays out $3.15 annually, and its share price is currently $55. If you take the dividend amount that's paid out annually and divide it by this $55 share price, you will see that the dividend yield is 5.7%. And finally, there's been a strategy that's been gaining momentum recently, which is known as the dividend growth investing strategy, and there's tons of YouTube videos out there on them. One channel that I really like is called Joseph Carlson, and in this strategy, which I'll talk about more in another video, you essentially invest into dividend paying stocks consistently that have a proven track record and have consistently increased their dividend payments over time, and any money you receive from the dividends you reinvest into the dividend paying stock until one day you earn enough dividend income where you could live off it. This is the investing strategy I currently started using, and I strongly recommend it to new people that are just getting into stocks. Anyways guys, hope you all enjoyed this video, and if you did, please leave a like down below for daily stock market related content and other business related videos.